difficulties this morning, so the stream wasn't able to be done on opening bell. However, everything is looking like it's going the way I want it. As far as today is the quadruple witching hour for the market, and what that means is the the stock options, the stock index futures, the stock index options futures, and the single stock futures, they all expire today. So what happens is there's a lot of volatility as far as these option contracts because if an option is expiring, most people who are selling the option want it to expire worthless so they can make money. And most people who are buying the options want it to expire in the money so that they can make money. So usually on these days, there's a lot of trading volume, and with that trading volume, there's a lot of volatility. So for the witching, it usually only happens on Fridays. So with Fridays, usually that's just stock options. Sometimes there's stock index futures like SPY and whatnot, and so you'll get a double witching. But as of a triple and quadruple witching, those only happen about 4 times a year, and they happen every third Friday of March, June, September, and December. So it's pretty much usually when the stars, I would say, line up. So just looking at what happened in the past is pretty much every time it's hit the witching day, the VIX has spiked up by a large amount, just because the amount of trading and volatility gets increased. So right now we're seeing at the end of the day, so the SPY was getting sold, dramatically towards the end of the day yesterday, and at the very end, that's when they pumped it up. You can see we had that descending triangle yesterday, and at the end of the day, it started getting pumped up, and then today, they basically started pumping up the SPY and pumping up all the different stocks. And so they usually do that at the beginning of the day to get the SPY as high as they can go. But then again, there's COVID, so this is uncertainty. This is based on bias for the past 10 years of data where the market gets pumped up at the very beginning and they try to get it as high as they can. And so basically what they're trying to do is when they get it as high as they can, when the futures expire and the new futures essentially get intact, that's when they use that data to write what the new futures value should be as going on into the next the next quarter. So basically, as this price goes up, that's what they open on whatever the opening bell is. So 314.34, that opening bell, that is the futures, price that they label, and then after that they pretty much sell everything off. So you can see the market's starting to sell, momentum starting to pick up as far as the VIX. So usually, if you're looking at, let's look at year to date, and this may be a little skewed just because of COVID, but the last time the witching happened was on March 20th. So you can see here, the market got pumped up really, really high, and a little bit hard to see just because this is the 1 year date. But you can see right around here, they pretty much had their sell-off. So based on the correlation, you don't know exactly when it's going to happen, but you know around the time of the witching is when the volatility increases really, really high. So that's why we opened up on the SPY yesterday, or we opened up on the VIX yesterday before the witching, just anticipating that the market would jump up like crazy. Obviously, this was COVID, so there's a big increase here. So you can probably see the 65 to 78 range, which is really, really volatile. And then the last time before that, that was December 20th. It wasn't a really big movement here. It was about 1470, and it went up to 1508. But I believe in December we had a really good market rally. And then prior to that, the other witching was on 9/20th, which is September 20th. So you can see here, the VIX went from about 2186 straight to 2360. And then the previous years, the witching has made a pretty drastic move on the market. So basically, I'm just waiting to see, with my VIX calls, to see what's going to happen as far as the market volatility. And this is all based on hypothetical data that happens. Now, if the Fed is already predicting that the market is going to have some type of crash during the witching, that would explain why they're going to move their overnight repos into afternoon repos starting June 22nd, which is next Monday. So I'm assuming they're probably anticipating that there's going to be a crash as far as what the VIX is, or as far as what the SPY is going to do, and that's going to induce a lot of volatility in the market. So what they don't want to have happen is they don't want to pump right in the morning, because if the market's going to crash, by the end of the day today, and then they pump everything in the morning on Monday morning, then as the market's crashing, people will buy the dip at the end of the day, and people know that the Fed's going to pump on Monday, and then after that, they're going to crash it again. So I think why the Fed changed their repo hours is if it crashes today and they don't do an overnight repo on Monday, then if it crashes again on Monday, or if it doesn't crash today and it crashes on Monday, then the Fed has an opportunity to buy the ETFs and buy the market back up so that it can sustain itself without crashing to all-time lows. So once again, that is all hypothetical. We're just watching to see what's happening here. As far as the momentum, the SPY is going down, and the VIX momentum is slowly picking up. You can see on the squeeze, yellow bars are starting to get closer and closer to the small point, which is pretty much, I think it's set at 0, and once it goes to 0, it'll go to blue bars, and that squeeze, that's the squeeze I'm hoping for volatility to increase like crazy. But definitely give you guys an update to see what happens today. Today is quadruple witching, and you never really know what's going to happen. Usually at any given point in time, volatility can spike as soon as people start selling off.